Ladies and gentlemen, welcome back to the channel. In today's episode, we're going to be covering all things markets. What happened today? Why are you still seeing this pressure on stocks in some areas? We're going to talk about the volatility collapse that we are starting to see that I predicted for days now. What does that mean? What's coming next for stocks? Ladies and gentlemen, hit the like button as well as subscribe to the channel if you have not done so already, and get ready for the breaking news of the day today. If you guys want to come join the trading community as well, check that link out down below in the description of today's episode, and let's get started. Trading community, but with that said, let's get started. Okay, so if we look at what's happening in the broader markets today, the VIX is up 0.1%, basically unchanged today. The Russell 2000 is up 0.2%. NASDAQ is down almost 1%. S&P is down 0.42%. The Dow is up 0.44%. Now, why the NASDAQ is down today? I mean, look no further than big tech. Meta, down 12%. Microsoft, down 2.5%. Amazon's down 1.5% before they report earnings today and after hours. So people are a little, skittish around big tech right now. But the one thing that really matters is the future, okay? When you're investing, you're buying a stock for the future, right? Meta drops 10% as heightened AI spending overshadows strong third quarter results. How idiotic is that? The stock drops 10% as they're spending more on AI, overshadows strong third quarter results. How stupid is Wall Street? Okay. CEO Mark Zuckerberg defended the ambitious spending plans and said the company is already seeing returns in its core business and aggressively preparing for superintelligence. Isn't that the point? Isn't that what, Wall Street has wanted? Meta now expects CapEx to range between 70 to 72 billion versus prior guidance of 66 to 72 billion. So they basically raised the low end range 4 billion and kept the high end range the same. Okay. Zuck says it's pretty early, but I think we're seeing the returns in the core business, he said. That's giving us a lot of confidence that we should be investing a lot more, and we want to make sure that we're not underinvesting. Zuckerberg said the company is aggressively, preemptively building up capacity to prepare for the arrival of superintelligence, where Meta will be ideally positioned for a generational paradigm shift in many large opportunities. This shows the AI wave that we are in is alive and well. Okay, the big risk would have been if Meta, Microsoft, your hyperscalers came out and said, yep, we're done spending on AI. That would have crushed this market. But they spend more and give you good earnings, and the stocks still get punished in the short term. That's how stupid Wall Street is sometimes. Okay? You got to kind of see through some of that. There's a lot of things that are causing noise in markets. If we look at something I've talked about for a while now, the VIX EQ today is down 7.5%. So this is the equal weight VIX for the S&P. It's down 7.5% today. The VIX is up around 0.5%. Okay, this says it's down a little bit. It's a little delayed, but you get the idea. Okay, the equal weight VIX is down quite a bit today. That's a good thing. So as we've talked about, the vol crush, the volatility crush is happening. Okay, and it will start to trigger some pretty incredible buying in this market. But again, perhaps you need to get through Amazon and Apple earnings today in after hours. That's going to be big, okay? Amazon, Apple, Coinbase, Reddit, Western Digital, MicroStrategy, Rocket, Riot, Cloudflare, and Roku will be reporting today in after hours. Obviously, the ones that matter, Amazon and Apple. Once you get those out the way, then volatility is going to get crushed even more, and that's going to start triggering some buying pressure. Now, 10-year Treasury yields today are up another 3 basis points. Big deal. Okay, the Fed yesterday told us, hey, look, we weren't data dependent before, but we are now data dependent. So 10-year Treasury yields are up about 3 basis points, but Jerome Powell is leaving the Fed soon. The Fed told us what we already knew. If the economy strengthens and inflation is strong, upwards pressure on inflation, in other words, they're not going to be cutting rates just because. Now, if the economy continues to weaken, if inflation continues to come down, they're going to be cutting rates. This is what we knew, okay? I think Wall Street, they just want an excuse to screw retail investors, okay? That's what this ultimately comes down to. Even the good news that we're going to talk about in just a moment, it's good news. But again, they just want to spook retail. Oh yeah, isn't this funny? Alphabet stock jumps 4% after posting strong results, boosting AI spend. Okay? The company known as Google is spending more. The company known as Meta is spending more on AI, but two totally separate reactions today. Now, Google had really strong earnings. That's part of it. But you can see here, Google expects their artificial intelligence infrastructure spend to be between 91 and 93 billion, up from 85 billion prior to the quarter, noting continuing strong cloud demand. Sundar Pichai said the company had 155 billion of a backlog for Google Cloud at the end of the quarter. Looking out to 2026, we expect a significant increase in CapEx. Chief Financial Officer told investors on the earnings call. Deutsche Bank said in the note that there was virtually no hair on the print and wrote that the setup coming into the report was not easy, with the stock up 43% since Alphabet issued second quarter earnings. So across the board, companies are investing more into AI. That is good for the AI trade. That is good for this market. But, the initial reaction is maybe not as good as some would think. But we're going to talk about what could be coming next and why why this is all good news. Now, the Trump-China meeting. I was actually watching it live last night. We were watching it in the trading community. If you guys want to join that, check the link out down below in the description of today's episode. But here's an article that says the biggest takeaways from the Trump-Xi meeting, what the truce covers, and what is still unclear. So, China has agreed to pause for 1 year the sweeping export controls on rare earths announced on October 9th that had touched off the dispute. The U.S. cut tariffs on China-related to fentanyl to 10% from 20% previously. This reduces the overall rate on Chinese goods to around 47%. The tariff situation, okay? The Fed is scared of tariffs and inflation, blah, blah, blah. Well, now the tariff rate is a little bit lower. There should be less fear around inflation from tariffs, okay? That in and of itself is good news. Not having the 100% tariff on China is good news, okay? We're going through a de-risking phase. China-U.S. tensions are getting better. Actually, the tariff rate just went down a little bit. That is good. We just had the Fed, which didn't really tell us any new information besides they're ending QT and starting a small kind of QE type of thing where they're actually going to be buying treasuries, okay, with some of their MBS roll-off that they see, okay? Not like massive QE, but a little bit of QE. That was actually positive. The Fed was net positive. Earnings from hyperscalers, insanely positive. And this meeting from Trump and China, very positive as well. So we really haven't had any bad news in the last couple of days. Stocks are selling off. It's the end of October. It's a pretty volatile month. October, just in general, is volatile. Now, it says here it is unclear whether the trade truce will have any impact on Nvidia's exporting chips or on TikTok. That could be a little bit of the disappointment because some people were expecting that Nvidia chips would be allowed into China again. And so far, we haven't heard anything about that. Now, Trump said, quote, "We have a deal. Now every year we'll renegotiate the deal, but I think the deal will go on for a long time, long beyond the year. But all of the rare earth has been settled, and that's for the world." Trump said he cut tariffs effective immediately on China related to fentanyl to 10% from 20% respectively. This reduced the overall rate on Chinese goods to around 47%, the president told reporters. Trump had previously threatened to slap China with a 100% tariff on November 1st over its rare earth controls. I think what is also likely affecting this market is the government shutdown still, okay? It feels like there's got to be something else here. Now, again, right after you have major events like big tech earnings, a deal with China or so on and so forth, the Fed, the first reaction is typically not the right one, okay? And the shot of fear that Wall Street has seen really the last couple of weeks, but in culmination even today, doesn't seem like the right move, okay? You got to give it a little bit of time here, but it feels like maybe the government shutdown is affecting things quite a bit. Once that ends, hopefully sooner rather than later, we can get back to getting economic data. We can get back to having a little bit more of a certain path around the Fed and rate cuts and where the economy is at in general. Okay? So that's the last thing it seems like that we need a little bit of clarity on. But net, what we've seen the last couple of days has been very positive. And I do think it will fuel this market to the upside, specifically the small cap AI arena. That's where I'm seeing the most opportunity. Maybe you could say mid-cap AI as well. Like that could also be an attractive area. Now, Scott Bessent said today, "I think we're going to have parallel prosperity next year on Main Street and on Wall Street." Scott Bessent said the government shutdown is starting to eat into the U.S. economy. It says here, American Airlines, United Airlines CEOs to attend an event at the White House on the impact of the government shutdown on aviation. So, maybe there's going to be some pressure from that to get the government to reopen. NVIDIA's CEO says talks between the U.S. and China are in the hands of Trump. Scott Bessent said, "We finished the China deal, signatures possible next week." Bessent says that job growth will rebound very strongly. Bessent says, "I'm very optimistic for 2026 growth and inflation levels." U.S. Treasury Secretary Bessent says, "I applaud the 25 basis point Fed cut, but don't like the language." Yeah, neither did Wall Street. Bessent says, "I imagine we would have a Fed chair candidate by Christmas." And Bessent says that China agreed to buy 12 million metric tons of U.S. soybeans this year. Bessent says that U.S. Section 301 measures on China will also be suspended. Bessent says the U.S. will suspend entity list restrictions for U.S. technology exports for 1 year as well. Bessent says that Trump and China's Xi were able to discuss big picture issues. U.S. President Trump says he discussed sales of NVIDIA chips to China with Chinese leader Xi, and that it is up to Beijing to continue conversations with the $5 trillion company about access to the world's largest semiconductor market, per Bloomberg. China's President Xi says, "I am willing to work with Trump." China says that Trump invited Xi to visit the U.S. And Xi and Trump agree to strengthen cooperation. Trump says meeting with Xi was, quote, "amazing. Big decisions made and conclusions coming. China to resume soybean buying immediately. Xi to work hard to halt fentanyl flow. Discussed chips, but not Blackwell. China to keep rare earth exports flowing with 1 year deal set to extend. The U.S. to cut China tariffs to 47% from 57%. Trump to visit China in April. Xi to visit U.S. after. Will work with Xi on Ukraine. Says Taiwan was not discussed. And calls the meeting a 12 out of 10. Says U.S. nuclear testing appropriate as others test. Trump also said today he had a very pleasant conversation with Canada's Prime Minister Carney. So, all of this sounds like good news. But yet, stocks just not having that bullish reaction today as a lot of people would have expected. I think we need to give it a little bit of time. As I said on Sunday, Thursday morning could be a little bit more mixed before you get Amazon and Apple earnings today and after hours. That could solidify the deal, really crush that volatility once and for all, and send stocks moving higher. But I do think people are still a little nervous about the government shutdown and eating into growth. Again, you can see the equal weight VIX is down 8% today. Give it a little bit of time, but the buying pressure is going to kick in as this volatility is collapsing. Okay, so in conclusion, what do I think is happening today? Okay, we are seeing the volatility collapse. We're seeing the Russell is up a little bit. Okay, 10-year treasury yields are up a little bit as well. We're still digesting all of the Fed, okay? So volatility is collapsing because of big earnings and because the Fed is out of the way. Now, we still have Amazon and Apple earnings today in after hours. We'll cover that in a video later on today. But essentially, you're still digesting the Fed. The Fed didn't really tell us anything new. It just sucked to hear that they were data dependent, and that if the situation develops that does not warrant a rate cut, that they're not just going to cut rates because. We already knew that. That's not groundbreaking new information. The Fed started a form of QE. We're not going to get into exactly what it is, but basically the Fed is taking their mortgage-backed security income and going to buy bonds with it, okay? It's not like a massive QE, maybe a couple $1 billion a month, something like that, but a form of QE nonetheless, and they're ending QT December 1st. That's actually the biggest change that we had from the Fed. Now, markets are in a pretty volatile period right now. Government is shut down. We don't have a lot of economic data, and that's probably why people didn't pay that much attention to that. Now, obviously, with the earnings setup, AI is alive and well. There's no indications that AI is going anywhere anytime soon. All hyperscalers raised their AI capex, which is a good thing, right? That's a good thing for this market. AI is the dominant force in this market, okay? But it feels like we're almost seeing a shakeout. This is the last little shakeout before a major rally is coming, right? Volatility is collapsing. We just got the Fed that was neutral and or positive. Okay, from the perspective of they actually cut rates, they ended QT with a form of QE. Sure, again, did the Fed tell us that they're data dependent? Yes, we already knew that, okay? China tariffs were lowered 10%. They were lowered 10%. Rare earths are going to flow. It looks like U.S.-China tensions are getting a little bit better versus worse. And I think if this news would have came out a month ago that China tariffs were down 10%, the Russell would have been up at least 1%, right? And maybe 2%, okay? But there's this bit of a shakeout happening right now, it feels like. And uneasiness, probably just late October volatility before we gear up for the end of the year rally, okay? But give it a little bit of time for things to shake out. Give it until tomorrow. To let investors settle down around the Fed, to really price in what this means for stocks. Good hyperscaler earnings, positive Fed. I know, sounds crazy to hear, but it was a positive Fed meeting. And good China relations with a booming AI ecosystem. the upside is there, right? The upside catalysts are happening, okay? For people that want things instantaneously, that might suck to see, and I think that's where a little bit of the shakeout is coming from, right? Because people are like, okay, markets, they're either going to rally after the Fed, they're going to rally after earnings, they're going to rally after a China trade deal, essentially, and if they don't the next day, Wall Street's going to take that as a negative sign, or retail investors are going to take that as a negative sign, when in fact, maybe it's a day later, maybe it's 2 days later, maybe we really rally next week. Now, as we talked about on Sunday, I think tomorrow is going to be the big rally day that really kicks off the end of the year rally, but it feels like maybe some retail investors are going to get, shaken out of their positions following the last couple of weeks of just really some crazy obliteration and selling in markets the last couple of weeks. And it feels like retail was just waiting until today to, make their final moves and their final decisions. And hopefully that's not any of you guys. Now, CNN Fear and Greed Index today, you're at 42. You're still in deep, not deep fear territory. You're still in fear. Getting closer to neutral, which is at 45. Market momentum is greed. Stock price strength is fear. Stock price breadth, extreme fear. Again, to what we're pointing to here, a lot of stocks have been declining for a while. And I think a lot of retail was like, okay, again, we have these big catalysts. We're going to rally after them. If we don't, I'm going to sell stocks, right? I think that's the mentality that people have, that if we can't go up on a good Fed, on good hyperscaler earnings, a trade deal essentially with China, that all hope is lost for this market. And it's not the approach you want to take, in my view. Again, could I be wrong? Sure, I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions. Put and call options are in extreme greed. Market volatility is neutral. Safe haven demand is fear. Junk bond demand currently in extreme fear. The AI Investor Sentiment Survey, we will be getting a new one, I believe today. Today's Thursday? Yeah, we should be getting a new one today. We'll see here in just a moment if we do have a new one, if it's going to load for us. It might not load, so unfortunately we might not be able to see that. But the percent of stocks trading above their 50-day moving average today, sitting at 42.69%. Recently we were closer to 50%. Okay, so you've definitely seen stocks go through a little bit of further downside, and again, I think that's part of the shakeout, where it's designed that way, right? You can't have everyone win. And now you're just collectively, getting more people to sell out, more people that get bearish, and to a certain extent, like, there's not enough bulls. And when that happens, well, you start to look at some pretty significant upside. And I think right now there's a lot of people that are bearish, a lot of people that are, not feeling great about this market. And that's usually the moment in which things start to get a lot better. Retail sells out at the last moment, and then boom, the recovery comes, and retail begins to chase again. So you don't want to be the one chasing, okay? You want to make your decision now, okay? See if we can pull this up again. I don't know what's going on with this survey. The whole survey might be down because everything else is loading, but this thing is not. And I really wanted to see if there was a new one. But, it doesn't look like the site is live, I guess. Pardon our interrupted. Let's see, if I could pull it up on my phone, if it's my computer that's being retarded, or if it's the actual website. Yeah, it's the actual website is not live right now. Interesting. So, nonetheless, I'm sure bearish investors rose as well. At the time of recording this video, the Russell is up 0.41%, so a little bit of that risk on, but, not everywhere. Like some of the stocks we really like, Resolve, down 0.73%. What about Poet? That's one we've covered quite often on this channel. down 1.51%, so about 1.5%. TLT down 1/4%. Tesla's down 4%. I think this is probably that last shakeout before we could rally tomorrow. That was my initial projection to start this week, was we'd have a really good Monday, a mixed Tuesday, mixed Wednesday, up until the Fed. I expected we'd rally after the Fed, but markets were a little surprised with what the Fed delivered. Bit of a mixed Thursday, and then we rally into Friday, right? Friday's the start of this year-end rally, and that's looking a little bit more obvious. I think there's a lot of news that Wall Street needs to digest, and more retail investors that need to get shaken out in that process. So again, what I'm looking at here is AI alive and well. Check. Is the economy alive and well? Check. Is the Fed still in accommodative mode? Check. Okay. China-U.S. tensions getting better or worse? Getting better. Check. Okay. Year-end seasonals. We rally about 4% on average in the last 10 weeks of the year. Yes, the end of October is pretty volatile, but November is the strongest month of the year historically. Check. Okay. So, when I'm running through the checklist, all the checks are checking. The boxes are being checked. Okay. So, it's not the time to fade this market, in my opinion. Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day. Now we'll see you in the next one.